Nvidia NVDA stock. Is it a good buy? I want to break down and take a look at Nvidia NVDA stock as a value investment. The latest financial data came in pretty strong, but the stock, NVDA stock, seems to be sputtering out a little bit. What's going on? How can we break this down and get a good idea as to where it is, where it could be, given core value investing principles? Let's jump in. We'll take a look at Nvidia NVDA stock. If you're just joining me for the first time, what I do here is I break down the core aspects of the overall stock market analysis. Plus, I'm doing a bunch of value investing, looking at some of the biggest stocks out there. Today, we're looking at Nvidia, NVDA stock. If this is the kind of content you're looking for, I just launched this channel. It's a breakout from my original channel. Make sure to hit that like and follow button. Thanks so much for supporting the channel. Here we are. We saw a pretty big rally in all through November, which we've seen this with all stocks. The bond yields have backed off a little bit. They had pushed up significantly, and since then, yields have backed off. The thinking is simply that bond yields are going to remain higher for longer, but that they're not going any higher. And so we're getting an adjustment. We're seeing traders getting in and out of these bonds. There's still a lot of interest in bonds overall, but they don't look like they're necessarily going to affect the stock market as is. We get more information coming up this week. But for now, since the release of the financial statements from Nvidia, NVDA stock has come down. Let's break down real quick what's going on. Here's a look at quarterly revenue. A solid 18.12 billion in revenue, but more importantly, projected revenue. 2024, 2025, I had to move these numbers upward. That projections for the next 2 years are higher, and this also includes projections for earnings per share. Not bad news at all if you're an NVDA stock holder. But what if you want to get in? Taking a look, we'll go real quickly through here. Gross margins, 74%. Operating margins, 57.5% for the latest quarter. And then finally, net margins, over 50%. That means over 50% of the revenue that these guys are taking in, NVIDIA is keeping, passing on to investors. So that's a solid margin for pretty much any company out there. Earnings per share, $3.75 for this quarter. This was, again, as you can see, things are moving upward significantly. Projected earnings per share. This is what I really want to look at. $12.22 for 2024 for NVDA stock, and then going all the way to 2025, $19.47. Again, not only did I have to push revenue upward, I also had to push these projected earnings upward. But the stock is backing off. NVDA stock has come down a little bit. Let's break things down. 2024 earnings per share projection. Now, this includes Q4 2023, then the first 3 quarters 2024. So it's the next 4 quarters. If you bought NVDA stock today at $432.30, you'd be sitting on about 2.5% yield. That's not outstanding. That's a little on the softer side, in fact. Moving forward into 2024, that extra quarter, you see things kind of shifting upward a little bit, but the 2.5% yield is really what I think everybody's kind of focusing on, that, yeah, there is increased revenue and there are increased earnings. But it's not really that competitive when you look at the Treasury yield, which, since I've type this up, it's down below 4.5%. Nonetheless, that's your comparison right there. You have a choice. 4.5% for the Treasury or 2.5% for owning NVDA stock. Hopefully you would choose the higher, because that's what you're looking for ultimately, is that yield. Given that, okay, you get an extra 2% per year if you get the Treasury yield. But what about risk? What's the downside risk? Well, if the U.S. Treasury yield is trading at 4.5% and the Federal Reserve lowers interest rates, yield would go downward, price goes upward. There's an inverse relationship. So if you're holding at 4.5%, and yield drops, price increases. Now, what are the chances that the Federal Reserve raises interest rates? Over the course of the next 10 years, they may. Let's be fair. But eventually they're going to bring things down. So your 4.5% may actually be sort of like really darn close to the bottom. So your downside risk is really low holding on to treasuries, the benchmark investment number. NVDA stock, 2.5%. What's the downside risk? What if the economy contracts? If the economy contracts too much, all stocks are going to be going lower. And if you look at these stocks with their yield, they're very overvalued relative to what savvy investors are staring at right now. A lot of savvy investors are looking at the 10-year and the 2-year, specifically the 2-year, and are gobbling them up because they're outperforming yield you're getting from stocks with almost no risk. First off, if you buy these bonds or notes, it's the U.S. government. You're going to get your money back. If you bought NVDA stock, you could see some downside. So there is risk there. Sure, the treasury yield may go a little higher, which would mean you didn't buy at the absolute best price. But eventually the Federal Reserve would lower interest rates, and you're sitting on profit of maybe 15 to 20%. And you're locking in 4.5%. That's how you look at these yields. So do I love NVDA stock? Not really, not at this yield. Plain and simple. If I have a choice buying this versus the U.S. Treasury yield, I'm jumping all over that Treasury yield all day long. The risk is minimal, absolutely minimal. The upside, much higher. Here's another thing, price to earnings ratio, and this is really kind of where it spells out. Price to earnings ratios have been skewed heavily for against NVDA stock, plain and simple. And it's very possible that as we see higher interest rates affect the U.S. economy, we'll see some contraction. We'll see these stocks moving lower because NVDA stock is not the only one that has a yield that is sub the 10-year treasury. That's the benchmark. You want some kind of premium if you're going to take on more risk. Savvy investors are getting out of stocks and buying into these bonds because it's an easy win for them. Taking a big look at Nvidia over the course of the past, about 8 years or so, 16 to 24, probably going to see some downside. And that's across the board. A couple reasons. The economy is starting to contract somewhat, which means revenues will contract somewhat. I just raised these revenues projections based on sort of all things moving forward at the same pace, but that's not probably going to happen. We are seeing unemployment numbers trickle a little higher. How much higher? We'll find out more. See, that's the risk when you take a look at these stocks versus your alternative investment, the 10-year. For me, looking at Nvidia, I think it's overvalued. I think it will adjust. I think the economy is going to adjust. I think interest rates over the course of the next, say, 3, 6, 9 months remain pretty high, but the Federal Reserve may actually need to step forward and raise it if we see the economy turn back upward and we don't see inflation drop as much as the Federal Reserve would like. That would really pressure stocks lower. If this is the kind of content you're looking for, make sure to hit that like and follow button. I do analysis on stocks, the bigger stocks, and I also break down stock market analysis, everything you might need to know about what's going on with the stock market itself. See you in the next video.